Hey, what's up, guys? I hope you're doing great. So today we'll go over the two trades that I took on Euro USD. But before we do that, I'm gonna let you read the disclaimer first. So as you know already, I am not a financial advisor, and this YouTube video and this YouTube channel is for entertainment purposes only. And as you know already, if you learn something, if you get value from my video, if you enjoy the video, please tell a friend about me, tell a friend about Escape FX, and yeah. So now I'm gonna go through the trade. So basically, what I saw at 6 in the morning, because I woke up at 6, I saw this wick taking out this resistance range. So a lot of people was sending me pictures of their trade, which was bearish, based on the trap models, which was a good trade, and you should have been break even at this point already. So now what I saw was I mark up my daily open. The market is currently ranging under the daily open, and also we took out the weekly low right here. So now the market took out the weekly low, took out liquidity out of the market, and we're currently under the daily open. Therefore, the bias is bullish. So now I'm looking to buy the market. So I want to buy the market in a good place. So this place was way too high for me to buy. So I was currently waiting for the market to go down, and also wait for the New York session to pop out. All right. So now also, if you look at what the market is currently doing, the market is currently doing a bearish momentum. They're currently trying to make people sell the market based on the fake direction they are building. So obviously there's going to be a lot of stop loss right here because they are faking the fake direction, and this week is the place where people is going to put their stop losses, because usually retail traders and smart money traders put their stop losses right at above the wicks. All right. So now I'm currently waiting for the market to go close to the weekly low, because this is a cheap price for me to buy. So I took an entry right here. And also, if you look on the 15-minute time frame, you will see there's a big gap, and this candle is filling the gap. All right. And also, I'm targeting this high right here, you know already, because there's a lot of stop losses, and this is a fake direction. Not only that, look at the timing. Guys, it's 6 a.m. in the morning. When the market is trapping people, they want to trap the most people possible. 6 a.m. there's not a lot of traders in the market, because there's a lot of traders in the market during New York session and London session. All right. Between those sessions, there's not a lot of volume, there's not a lot of people, and when the market want to trap people, they want to trap when there's a lot of volume. They want to trade with a lot of people inside the market. So 6 a.m. is way too early for the market to trap people. This is why this is a fake trap. So now we're targeting the fake trap right here. Like I said, this video is a little bit more advanced. So now we're in the buy position. Right here is the place where I put myself break even level. All right. So now we're break even on the trade, risk free. And now I see another opportunity for me to enter the market. Why? Because the market will usually, before New York session happens, they will spend the time in between the range. And the reason why they want to spend time in between the range is because they want to show people a fake direction. And also, so now people see a double top right here. So I'm just gonna note it down. So now people see a double top. So they want to show people the fake direction, and also they want to let the time for people to enter the market. This is why they're gonna spend a lot of time in between ranges. All right. So now I see another opportunity for me to enter the market. This is a trap model 2 with the 8 pip stop loss. Always targeting the eye. So now I'm waiting for the market to trigger my second entry. Now I am in the market. This is the area where I put myself break even level. So I am waiting for the market to smash my take profit, and here we go. The take profit got smashed. All right. So basically, this was the breakdown of my 2 trades. I hope you learned something. So just to sum it up. So this is the daily open. So the market was currently ranging under the daily open. The market took out the weekly low. So the bias was bullish. And now we're trying to find a pretty good place to buy, a cheap place to buy. The area to buy the market is close to the weekly low. This is a cheap place, and also because the market is filling up a 15-minute gap, and also because you know that this is a fake trap based on the timing, because this wick right here does not trap enough people in the market. Yeah, so this is the video, guys. I hope you enjoy and have a nice trading week.